I'm sure everyone right now is complaining about inflation. Inflation has gone up to 7.8%. And so you notice that every time you go shopping for food, you may be noticing that, it's a little more, it's not just a little, it's really very expensive to eat out, or the prices of the food you're buying has really gone up. With rising inflation, what's going on right now is that the RBA is actually trying to temper that inflation rate of 7.8%. So they're trying to bring it down to 2 to 3%. Because of this, the RBA has been increasing the cash rate. So the cash rate right now is above 3%. And so they've been increasing the cash rate so that people buy less, which means the effect of people buying less of higher cash rate is for inflation to come down. Another effect of the high cash rate is the interest rate that the banks are passing on to their clients. So you may notice that your mortgage repayments has also been going up. And because the mortgage repayments are going up, there is also an effect on the prices of properties. So you also know that the prices of properties have also been coming down or correcting. So what the government is doing right now is trying to protect the property market and the construction industry, which is the reason why they've actually been giving out a lot of incentives and schemes for first home buyers. And even the New South Wales government has been offering, instead of paying the stamp duty in full, you can pay the stamp duty as an annual property tax, which makes it easier for first home buyers to get into the market. So we are experiencing high inflation, a rise in the cash rate, which means a rise in your interest rates that you pay to the bank, and of course, a rise in the mortgage repayments that you're making to the bank. And at the same time, Australia is also experiencing a drop in the prices of properties. With all of this happening right now, what should you, especially those with mortgages, be doing at this stage? You have to be realistic about your budget and understand that you may need to adjust your expectations or wait for a more favorable market. Keep in mind that high inflation means high interest rates, which results in lenders charging more in interest, making borrowing more expensive. Another tip is explore your options. Consider different property types, location, and financing options to find the best fit for your budget and goals. What's going on right now, because of the high interest rate, the borrowing capacity of most of my clients are also getting affected. In the past, I have let's say a double income, two clients both working. If their income is $150,000, they can borrow at least $700,000 to $800,000 in the past. Those numbers have dropped down. So anyone with a double income of around $150,000, depending on how much personal loan, if they have an existing car loan or credit cards, those numbers have dropped. And of course, they can only borrow around $500,000, probably $600,000 if they're lucky today. That's because the interest rates have gone up, living expenses have gone up, and so banks are scrutinizing, have raised the living expense, the household expenditure measure. They've raised that up, which of course affects borrowing capacity at this stage. Another tip, learn to negotiate. It's a buyer's market right now with property prices dropping, and if you're the buyer, it's your turn right now to negotiate with the vendor. The vendor knows and are aware, and the real estate agents are aware that the prices of properties have already gone down. So probably there's like a 10% drop here in Sydney. So if in the past or if a year ago the price of that property is let's say $1 million, if there's a 5% or 10% drop in the suburb where you're buying, expect the price to be around $900,000 to $950,000. So you have to be up to date with what's going on in the market. And we mortgage brokers, we also provide those information to our clients. We have access to RP data. We can always provide you with a property profile report of a particular property that you're wanting to buy. With that property report, you're well informed and you can actually negotiate with the vendor on the price of the property you're buying. Another tip, if you're one of those who have mortgages, make sure you're actually updated on the interest rates, what the other banks are offering. Banks are really hungry for your business. They want you to go to them. So that's why they've been offering cashbacks and very good interest rates to new bank borrowers. So let's say if you've been with this bank, negotiate your rate with your existing bank. And then at the same time, speak to a mortgage broker and find out what the other banks are offering. Especially now that the prices of properties have gone up, it's possible that the loan that you have that you took out 5 years ago, it's possible that the loan to value ratio of that loan or the percentage of the loan against the value of the property has gone down to 60% or 70%. Banks offer better rates if you have a lower loan to value ratio. And at the same time, they're happy to provide you with cashbacks ranging from $2,000, $3,000, or even up to $5,000 depending on the loan amount you're on. Another tip, plan for the long term. Because it's a market wherein if you're the buyer, you have the upper hand. And so it might be time for you to start considering looking into purchasing an investment property. It is possible that you've got your owner-occupied, you've got a lot of equity sitting in your owner-occupied property, and you can actually release that, which you can use as a deposit for the purchase of your investment property. So at this stage, you might want to consider doing your first investment property purchase. And the only person who can actually assess you and find out if you can actually possibly do this is either the banks or the mortgage broker. So speak to a mortgage broker instead. Plan for the long term. It's possible for you to build wealth through properties, and a mortgage broker can guide you through this process. My name's Maria Papa. I've also helped my first home buyer clients understand what's going on in the property market. Why is the interest rate going up? What can you do to help you through this time in which your mortgage repayments are going up? That's our job. Give us a call. I've also helped my first home buyer clients become property investor. Find out how you can release the equity of your home to purchase your first investment property. My number is 0430-144-008. My email address is mpapa@maverickfinance.com.au. Give us a call. My name is Maria Papa. Call us.